Good weekend all. Ira Epstein with your weekend edition of your financial market update. And this is for Sunday. And we are now on June 27th, 2021. All right, my friends, no major U.S. economic reports due out on Monday, but boy, we're getting wild action everywhere. In the grain markets, and I went right to the grains, even though it's financial, I'm there because all the flooding that is taking place. Lots of rain, some areas flooding, some not. I know in Chicago we had to close down expressways because of the massive amount of rain. We'll get a break today and then 5 days more where we're going to get these type of showers, tornadoes accompanied by them. In the stock market, what can you say? You've made a lot of new highs, no question about that. Barely hanging on here in the gold market. The dollar index hasn't decided up or down yet, but we'll look at some of these charts to get an idea there. In the energy markets, a lot of power. Remember, you had to move over now out of a lot of the Julys, except for Bitcoin, but most of the July futures contracts you should now be out of. So when we take a look at a monthly area chart of closes, we're coming to the end of the month, so it's proper to look at it. You're at a new all-time high, up another 1.6% right now. That's pretty darn good. When you look at a weekly area chart of closes, this is a new high weekly close. So the market still never pulled back to the 18-week moving average of closes. Has just stayed strong. The day charts give you a hard time, but not the weekly. And as you can see on this chart, you have another outside week up. Now, what you don't want to see this week is taking out the lows of last week, and that low was 41.2675. When you put on moving averages, you see that if that occurred, you'd probably get back down there. Would you do any real damage? I doubt it, even at that number. Normally when that occurs, if you took out the low of an outside week down, you get further away, but not in this case. That market's right up there. It would not damage the chart. If you continue up, one of the numbers we haven't hit in months on a weekly chart are these upper Bollinger Bands. You hit it at the end of April, but now we're getting into July, and here you are at 43.8451. That could be the next target. Where are you from there? 80 points higher. When you go to the slow stochastics, they've been fully embedded. So again, the theory, if you took my enhanced Bollinger Band course, you're buying the weekly breaks until you lose the embedded reading, looking for a combination of the upper Bollinger Band and what another indicator called a window envelope. When you look at the NASDAQ, you've just turned this market nicely up into the Bollinger, into the embedded readings. Not here. Week 1 was June 11th. Week 2, June 18th. We just finished week 3. So what this market now does, and I know this sounds wild, the embedded slow stochastic traders, as long as you don't take out this week's high, will start a buying program looking for that upper Bollinger Band. If it hits it, well, you back away from it on the chart, back away from your new buying. In the Dow, a whole different look. This market rolled over into the 18-week average. It lost its embedded reading. It hit the target, and that was the target when you lose that reading. And now the market's trying to figure out what to do. If you'll notice, it's kept the bias up as it has not closed under that 18-week average since back in November of last year. So that's pretty powerful as well. That's why I love looking at that line in the sand. It gives you some ideas. A weaker chart, and we saw that early on here back in April, May, was that we were under the 18-week average. You're in what I call that psychiatry trade right now. That is when you attack a lower band, an upper band, you narrow in the trading range, and you're going back and forth. The question is, can it break out one way or the other and hold a breakout? We'll see. The market is overbought into the resistance of the upper Bollinger Band and not trending. You have a higher high and a lower low pattern. In the 30-year bonds, is this the reversal? Did the market peak out? That is what I'm looking at really hard. The market got up and failed on its first challenge of the upper Bollinger Band. The trend is up, momentum was overbought, and it's breaking down. To get an idea that the curve yield's going to do something different, you have to get back under 157.4. That would break the pattern of higher lows, higher highs. You get a different type of pattern, and that's because of what's going on, how the market's anticipating the curve yield now. In the 10-year note, which had, as you can see, a lot of resistance that was not challenged. At the Bollinger Band and the 100-day average, you've had a pattern of higher lows, higher highs until this week when you took out this low. So now you got a higher high and a lower low. You've stepped out of a trend. What else is happening? Notice how these Bollinger Bands are wrapping their arms around the market. Therefore, even though traders will talk, oh, the market's going to drop here pretty big, be careful. That first challenge of a lower band, if it's hit, is often a support area. In the dollar index, does the dollar move higher if interest rates are moving higher? That's going to be the question. It might get answered this week. As of right now, the answer is bullish on the weekly chart. Higher lows, higher highs, support now 91.29.9, resistance 93.18.5, momentum up, bias up, trend up. Flip-flop that to the euro, not quite yet. You've got a higher high and a lower low, so not in a trend. Momentum is certainly down. Bias is down. If you take out this week's low, you certainly would have lower highs, lower lows. In fact, by just not taking out this week's high, you end up with that pattern of lower highs, lower lows. So I'll be watching that very carefully. Market should give us a tip-off tonight, Sunday night. In the Canadian dollar, you have a higher high. I know it doesn't look like it, but that is what it is, and a lower low. The market's fighting a battle at the 18-day average of closes on the weekly chart. Momentum lost its embedded reading, hit its 18-day average, found its support, looking now to see what next. Japanese yen, would you want to push this market beyond the lower Bollinger Band on the first test? I don't think so. You didn't quite hit it. You got to 90.05, and the resistance here is 89.99.5. But the trend is down. I don't think you're going to attract new selling when you have an oversold condition. So I'm looking for the support there, but not reasons to go long other than covering shorts. Bitcoin still in the news, losing a lot of ground here. You can see its momentum is still down but oversold. Pattern is one of a higher high and a lower low now. Seems to come back to these Bollinger Bands, bounces, and then comes back to them. We'll see what gives on. A lot of people getting nervous here that if this market gets under the 30,000 level, they want to see what kind of stops are under that. 31,000 for some numbers. I can tell them where it's going if it wants to get under there and stay under a Bollinger Band. It would be the 20,000 level. I'm not saying it's going there, but on a chart, that's the next zone if everything else gives ground. Brent versus WTI crude seems to be content in about the $2 range difference. And when you take a look at the weekly chart, you know that in the Brent, I know that my morning subscriber videos are jumping up and down. They bought the market, if they were listening to what I was saying, near a point from the low on the break this week on one of the daily charts. And up at the upper Bollinger Band, what do you think? Yeah, I mean, I'm thrilled. Same happened in the WTI, but not quite within that type of number, about 30 points away from it, but that's still excellent. If you take that, you know what I'm saying. If you don't, you should, because in the mornings, I really warm you up first thing for what's going on, and I throw out trades galore. I mean, have your pencil and paper. I'll talk about that in a minute for you. Well, one other thing before I get beyond this. Wednesdays are going to be our permanent day to set up our webinars. So the What's Up webinar, that'll be on Wednesdays, ideally. I'll open it at 12:15. You have to have an invite from me. You have to fill that out. Seating is limited, and we're having a ball. And I am asking for questions ahead of time. I tried that for the first time last week. Man, did we have a ball, because I was able to set up all the charts you would ask me about, and we just flew through them. It was an 18-minute video. A webinar. It was great. I do not post them. I refuse to post them. I want you live in there. If you can't make it, you don't see it. In this chart, This is actually a wrong arrow. It should be with this. Higher lows, higher highs, still straight up. I don't know why I had that, but it was earlier and I didn't remove it. Gasoline, what do you think happened on the first challenge of the upper Bollinger Band this week? Well, I think the pros took some money off the table. It is embedded. You hit it. I think they'll buy on the breaks again. I don't think this is over by a long shot. So as I said, you know, one of the things, whether you trade ETFs or the futures markets, at 5:40 in the morning, I start recording the futures video. The video is only for subscribers. Those subscribers get to see what I'm buying, what I recommend you buy and sell, not what I'm buying. I said that wrong. What I recommend you buy and what you sell. And in that, you get a full idea of stops, profit objectives, the whys. I start you off every morning, though, with the morning news. If there's any important news from Asia, Europe, whatever, if there's U.S. reports coming out, what is the market looking for on them? So you're going to get points of entry, profit objectives, updates on what's going on. Why? I want to give you confidence in your own thoughts. I cover the markets in all these. There's about 40 charts in them. And in the spiders, I'm covering now 41 charts. We'll change this ad. I brought all these up, so you're getting all these type of markets, and I'm always rotating something. So it'll be Apple that's in there, GMC will be in there, all the different parts you want of the hot stocks of the day, and then the hot spider and ETF. So by 8:40, I'm recording the spider ETF. Why later? Well, the market's open at 8:30. Let them settle in for the first 10 minutes of trading. I need that time to bring all the charts up to date. The cost to get both of these. Now, here's what you're going to get. You're going to get each week 12 videos of both. So, well, that's 12 videos total. 6 of the futures, 6 of the ETFs.